Hello everyone and welcome to this extended Mining Journal webcast. My name's Chris Cann, I'm Head of Mining Journal Research and I'm joined by Asiamet Resources Executive Chairman Tony Manini. Asiamet is sitting on some big news today in the form of a project level deal with substantial shareholders, Aeturnum Energy. That deal is focused on Asiamet's BKM copper project in Indonesia, which has been described by one investment bank as copper's best kept secret, with a feasibility study that's outlined a 20,000 to 25,000 tonne per annum copper cathode operation with an upfront cost of around 220 million. The after-tax MPV on that is around 125 million and the IRR is approaching an impressive 20%, and that's before they make any refinements to that operation, which I believe are ongoing. So welcome, Tony. Thanks for joining us.
Yeah, thanks, Chris. Good to be here. It's an important time for Asiamet right now, so nice to be talking to you.
Great. Tony, we'll get to the Aeturnum deal in a minute, but I wanted to start by just asking some basics around the copper market for investors who are listening, who perhaps aren't as familiar with the space as they'd like to be, but have heard some interesting things and may want to get themselves involved.
Yeah, look, just quickly. So, copper is the world's largest base metals market. It's a 22 million tonne per annum consumption market. And just to put that in perspective, probably the next biggest market is the zinc market. And that's in the order of probably about half of what the copper market is in terms of size. So it's a very large market. Copper has a multitude of industrial applications, which many people will be aware of, predominantly in electricity generation, in cabling, in wiring, in copper tubing, and all sorts of sort of industrial applications like that. I mean, importantly, it's a major component powering the infotech revolution. Copper wire, cable. I think. What's an important part of the growth story around copper over the sort of short, medium and long term is really the renewable energy and electrical vehicle thematic. In every solar panel, there's a network of copper capillaries. In wind turbines, there's a lot of motors which require copper wiring in the brushes within the turbines, and the EVs themselves, these days are using somewhere in the order of 4 to 6 times as much copper as a conventional combustion engine car. So we've got the traditional applications, and then we've got the new growth industries overlaying that. So that's the demand side. On the supply side, we are supply side people. We've been in this market for 35 years. It's increasingly difficult to find a good copper development project or a new copper growth story. And while prices stay subdued, that's likely to continue. So, we have all the major companies globally chasing new copper projects, new sources of supply. And there's a major thematic in terms of the supply side crunch coming down the track. So that's the underlying thesis for the Asiamet story.
How does it look now if you were, say, looking at the copper demand story even 5 years ago perhaps, but certainly 10 years ago? How much has that electrification of the world, but then specifically that EV story, changed that outlook?
Yeah, look, I mean, I think the major driver in recent times has really been the industrialisation and urbanisation in Asia. So Asia's been a growth engine globally for the past 30 years and continues to be the growth engine for global consumption of all metals and copper in particular. China is, there's been exponential growth in the use of copper in China. Everybody, I think, is aware that China's, undertaken a very large program of urbanisation, and there's been an enormous amount of copper utilised in the construction of all of the infrastructure related to that. Underground rail networks, fast train networks, cabling, buildings, etc. So, major growth there. It's been about 2.5, as I said, it's a 22 million tonne market. It's been growing consistently at about 2.5% for a long period of time on average. And we believe that'll continue sort of into the future. I think the overlay of the electric vehicles and renewables is something that's relatively recent and is just starting to pick up momentum. And that's why we're, increasingly buoyant about the outlook for copper and why everybody's chasing, so all the major players are chasing a good copper good copper project, because they can see that if we look at 5 to 10 years into the future, we're looking at a substantial sort of uplift on an already big market, and the supply side is just won't be able to supply into that market. So, there'll be pricing pressure for sure.
You've talked about the issues broadly on supply side. I think some numbers from S&P a month or so ago came out suggesting the average time to find and develop a mine these days is about 30 years. Obviously, when you find something and all things go well, it's a lot faster than that. But still, we're kind of talking about low grade assets or lower grade assets that take probably upwards of 6-7 years to get into production. I mean, how is that offsetting against that increasing demand story? And at the moment, pricing doesn't feel like it's at a level that's going to incentivize much of a pickup in that supply side.
No, exactly, Chris. You've sort of hit the nail on the head there. As I alluded to earlier, while prices stay subdued, the incentive price is not there for essentially new projects to be brought online. There is capital being invested into existing assets, but I think what's underappreciated is that the capital that's going into existing assets is not actually increasing production, it's maintaining production, because of exactly what you said. Grades are declining. We've gone from an average grade of production of somewhere just over 1% copper 20 years ago to today we're down below 0.6% copper average production grade. So there's been a big need for capital just to maintain the volumes of copper and grow them at the rate of 2.5% a year. But the price hasn't been high enough to incentivize new projects to be brought on stream. So that's really, when you've got a large market, it's continuing to grow. We've got these sort of, the new thematic of EVs and renewables, yet we just have grossly underinvested in the supply side. And, there's some statistics around that, in order to meet the supply side by about 2035, I think the number is, so it's 15 years out, there's a requirement for somewhere in the order of $200+ billion that needs to be invested in the copper sector to meet that demand. So, and there's currently very little money available for new projects, if any. So, that's the thematic, and that's why the long-term thinkers and planners at Rio Tinto and BHP and, Anglo and all the big guys are very actively, pursuing new copper opportunities, because they're looking out into the future and can see, what's unfolding.
Okay, Tony, and looking specifically at the Asiamet copper opportunity in BKM, the flagship asset there. It is in Indonesia. Investors who do want exposure to copper may be concerned about Indonesia as a jurisdiction. I know that Mining Journal, we have our own investment risk index. Indonesia doesn't do that well in those metrics. Can you give us an idea of what it's like to operate on the ground there, some of the challenges that you're facing as a company, and what you can do, if anything, to try and mitigate a few of those risks?
Yeah, no problems, Chris. I mean, we fundamentally see Indonesia as a good jurisdiction to work, and I think perceptions are greater than reality when it comes to Indonesia. I think it's an important thing to try and convey to listeners, in that what we fundamentally look to do in terms of where we invest or where we'd like to invest is really what is the long-term track record. So if you look back, Freeport has been operating in Indonesia for something in the order of 63 years. I think it's the world's largest gold mine and one of the world's largest copper mines in one, and it's been pretty much uninterrupted over that whole period. We've had a lot of major groups invest in the country over a long period of time. But what we've seen in recent years is, the Indonesian companies are growing up. I mean, there was very little capital available 20, 30 years ago. So there was sort of some lucrative terms put in front of investors to come and invest in the mining sector in Indonesia. We've seen a lot, homegrown industry coming up, and increasingly Indonesians, wanting to participate in that industry. Now, the important thing to note is that, nobody has ever had a project taken off them in Indonesia by the government. There have been a number of high-profile sort of cases related to disputes, which are commercial disputes between participants, people that were in joint ventures and various other participants in the sector. And they have been, in my view, mistakenly tied up with, sovereign, tied up to be sovereign issues when they're not sovereign issues at all. They're essentially commercial disputes between partners. And so, I think if you look at the country, it's got a long history of mining. It's in the top 10 in terms of gold production, copper production globally. It's the largest coal exporter in the world. So it's a resources and mining country. A lot of the growth in the country, the development of the country has been built on the back of resources. In terms of operating in country, like most developing country jurisdictions, it doesn't matter whether it's Indonesia or it's, somewhere in Africa or South America for that matter. I mean, you have to be very locally attuned. You have to understand the local culture, the history, and, the way to conduct, yourself and business in that jurisdiction. So that's where we're very comfortable operating there. As I said, in a macro sense, we think is a very good long-term track record. We, have been operating there as, individuals and collective groups of people for, over 20 plus years. So, we're very comfortable in the environment. We have a very strong local team, and I think one of the thematics that anybody will convey to you who works in the developing country jurisdiction is how important their local teams are. So, we've put together a very strong local team. We have very few expatriates in our business. There's only myself, James Dio, our CFO, and Mansour Geiger, who's geologist who's been with the KSK project since its inception 30 odd years ago. And lives in Palangkaraya in central Kalimantan. So, and aside from us three, we have it's all Indonesian nationals who essentially run all they're the ones who are interfacing with the government personnel, the governor, the local community, and essentially driving all the external relations, the things that I consider to be external relations and extremely important in, getting your permits, meeting all your statutory obligations, and essentially, fulfilling your obligations as an investor in the country under the contract of work or under the terms of the mining law that you're operating under. So, by having that good, strong local team with a good understanding, they've got good, strong local, good relationships at all levels of government, across the business sector as well. That's fundamentally important to being successful in any developing country, and Indonesia is no exception. And, we've spent a lot of time and effort to get good local people in senior positions, looking after all that aspect of the business.
Okay, and you speak about what you're doing there to manage that risk and to make sure that the project moves forward. Obviously, Tony, the reason behind doing that is so you can get permits. My understanding is that BKM, and I should probably clarify when you're speaking about KSK, that's the contract of work in which the BKM project sits. Just for anyone wondering about that, about how that works. Where is the project at in terms of the key permits it needs to actually move it forward?
Yeah, so we've been, progressing sort of all our permits, systematically as they've been required. As you alluded to earlier, we've completed a feasibility study. We have to submit a feasibility study to the Indonesian government for approval. We've received approval for our project in terms of all the studies work that's been done, the quality of that work, and satisfactory approval to sort of take that feasibility into the development phase. We operate under a contract of work, a 6th generation contract of work with the government of Indonesia, and within that contract of work, it specifies all the steps you have to undertake and all the statutory obligations you need to meet. So we've sort of been meeting those, systematically all the way through. We are currently in a phase that we call the operating phase of the contract of work. And as I said, we've submitted the feasibility study that's been approved. We've submitted our environmental impact assessment. There are a few modifications that we are undertaking to that based around some changes in the infrastructure. And those changes are related to some new infrastructure that's been developed in central Kalimantan recently, and which is of a great benefit to the company and the project, the BKM project. So we've just received our forestry permit to continue to do our exploration work, which is one of the sort of major value adds and drivers in respect of the BKM project. And we are currently well advanced in terms of the forestry borrow in use permit, which is what's called the Pinjam Pakai in Indonesia. It requires the completion of the environmental impact assessment. We've just received the approval from the Governor of Central Kalimantan for our project to go into construction and the construction phase. So that was a major hurdle where we've got local community support. We've now got the Governor's sign off, and he's made a recommendation to the central government for the project to sort of move into the construction or the development phase. So we've ticked all those boxes. The major key permit now is the Pinjam Pakai, which I said we're working on. We need to reach agreement with the forestry, the company who has the logging rights in our area, which we're currently doing. There's some access, road access. So there's a number of private users who utilise that road. The government wants a single road use in the area. So we're negotiating with the other private road users for access and shared maintenance to the road. So there's a number of things that's sort of happening all at the same time, and we expect all of those things to sort of come together towards the end of this year for final approval of the borrow and use permit, the Pinjam Pakai. So that's the last key major approval that we need essentially to move into construction on the project. As with all mining projects globally, Chris, I think it's a little bit misunderstood. Every mining project in the world constantly needs permits, and you need permits for tailings facilities, you need permits for water storage, and these are renewed annually or biannually, and every project irrespective of jurisdiction, has a constant stream of permits that it needs to maintain. So, you know, what we're talking about here is getting to the construction phase, and as I said, we're very well advanced in that. We're down to, you know, really the last major permit required for construction. But then, you know, beyond that, there's always a stream of permits that you need to maintain. But you know, we're very close to being at a point where, you know, we're construction ready, and that's, you know, one of the key attributes of this project. There's very few development ready copper projects globally, and, you know, this one is that Asiamet, you know, has at BKM project, you know, is just so well placed relative to, you know, the proximity to the local consumer market there in both Indonesia and wider Asia.
Okay, Tony, and you've correctly summed up the situation with permits and mining globally, not just in Indonesia. It is an ongoing process, but it's also around that development time. It is really, really tricky, and I think that's potentially where a lot of that 30 years of in-country experience under the belts of several of the people within the Asiamet stable will come in handy to kind of get those final permits to make that key transition from a proposed operation to something that's being built and will be a mine. Could you just quickly give us some background on who you have there and what you're talking about when you cite that experience?
Yeah, so just in terms of sort of the background, so myself, you know, I've been essentially 35 years in the industry, of which the last, you know, 25 years has been, I've had a lot of exposure in the Asian markets. I lived in the region for more than 10 years. So I've spent a lot of time actually living there and a lot of time sort of engaging. And I've essentially, from my days at Rio Tinto, which, you know, goes back now, you know, it's about 20 or over 20 years ago, I've been in and out of Indonesia and engaged in Indonesia. So, you know, a lot of background and experience there, and in, you know, other businesses that I've been involved with, we've owned and operated, you know, large mining operations in the country. So, you know, have very first-hand exposure. James Dio, who's our CFO, and I mentioned James is, you know, he's been working with me in various disguises over a long period of time, and similarly has, you know, very sort of broad Asian exposure, and has worked in various disguises with me in Indonesia sort of over the last, you know, 15, 16 years. I did mention Mansour, the third of our expatriate trio. Mansour, as I said, he's spent, you know, all of his working life pretty much in Indonesia, and lives in Palangkaraya, the capital of Central Kalimantan. We have a senior lady, Jaja, who looks after the external affairs, and Jaja oversees all aspects of the external affairs. And she interfaces very much firsthand with, you know, senior government officials. And then she has a number of staff under her, 2 or 3, one legal, a lawyer by background who's one of in the external relations team, and then 2 other individuals who interface on a day-to-day basis with the relevant departments. And, you know, tend to, you have to be engaging pretty much day by day, week by week with the officials. It's quite a bureaucratic system and process, and there's many steps involved. And it's like most things in most places, he who has his face in front of the official tends to get the attention. So, it's very hands-on. We have a group of people who are up there, as I said, almost every day, overseen by Jaja. Jaja interfaces with the senior government officials and oversees that entire process. Up in Kalimantan, the local community, we through a community development fund that was established by Mansour around 40 years ago. We undertake all our community relations and community development projects through that development fund. It's called a Yayasan in Indonesia, and they do all the community relations work essentially in the local province. And there's a senior team that sort of look after that. Mansour, he's been in Central Kalimantan for 40 years, as I said, and he's considered to be pretty much a local. He's got a very strong relationship with all the Dayak communities in the area, and the government personnel, and the governor himself. So Mansour sort of guides that at the provincial level, and Jaja at the central government level. So, and all of that is overseen strategically by myself and James. So, it's a very experienced and strong combination. And having done it all before a number of times, we understand the processes. Although they do change, Chris. So regulations change a lot in most places, and Indonesia, as I say, is no different. So you constantly got to be on top of the changes and ensuring that you meet all the regulatory requirements and provide all the necessary documentation, etc. So, but we've got, as I've sort of outlined, we've got, we've put a lot of emphasis on this, building that team and the strength of that team to enable us to, A, get to this point, but B, take the project through into development and operations. And as I said, I've been involved in that, and as have the team a number of times. So we've got the people, we've got the experience, and we've got the know-how to get it through.
That's themselves, Tony. Can we talk a little bit about specifically BKM and the geology that underlies that ore body, and then how that looks in a regional package that you've got yourself there before we move on to the actual proposed project?
The KSK contract of work sits in what's called the Central Kalimantan Volcanic Arc. So this is a major belt of volcanic rocks which runs up through the middle of Kalimantan. It's hosted a number of large deposits and some world-class deposits like the Cann gold mine, which was operated by Rio Tinto for over 14 years and produced around 500,000 ounces of gold a year for 14 years. So it's a terrain that can host some big deposits. The deposits that we have here, the geology, is what we call volcanic hosted massive sulfide deposits. So we have polymetallic zinc, copper, lead, zinc, lead, silver, gold deposits, and we have copper-rich parts of the VMS systems. We also have a number of porphyry intrusions throughout the contract of work, and also some porphyry-related styles of mineralisation. But the main focus for us really is in the BKM district at this time, and those deposits there are what's classified as VMS deposits. They're known globally to be very high margin deposits, and mined, particularly in Canada, represented in most countries, but particularly strong in terms of their endowment in the Canadian Shield. So that's the geology. Fundamentally, volcanic hosted massive sulfide deposits, and what we're looking at BKM is the copper end of the spectrum there, where we've got some supergene or some enrichment near the surface due to the weathering processes. So, altogether there at BKM, where we've got a resource of about 450,000 tonnes of contained copper. It's grading around 0.6 to 0.8%, and we've got about 70 million tonnes of material in total at the moment. We expect that to grow pretty significantly over time with further exploration. There's a whole raft of opportunities around the BKM deposit itself, which are only very poorly tested, purely because the company, is a junior company. We've had to focus all our attention and our resources, both people and financially, to get the BKM project up and running. And we've had minimal capital available to test these other targets. We have reserves of about 300,000 tonnes of contained copper. So, at that sort of 20 to 25,000 tonnes of production a year, we've got around a 9-year life within that existing reserve base, and the opportunity to bring more material into reserve, and as I said, expand the resources pretty significantly. So it's a district scale property. Mineralisation in the BKM area covers 25 square kilometres, and the deposit here is about 3 kilometres by 750 metres. So we've still got a lot to test, and still a lot of upside to come.
Okay, and then looking at, from that description, what you'd probably consider very much a base case scenario for the feasibility study. What does that look like? What kind of operation are we talking about? What kind of production numbers? And then obviously, how is the style of operation underwriting those MPV and IRR figures for you? You're on mute still, Tony.
What we're looking at here, Chris, is a heap leach, solvent extraction and electrowinning. So we're actually going right through to pure metal. So we produce, bright, shiny 1 metre squared copper cathodes on site. They are, 4 nines or 5 nines, so 99.99 or better. In terms of their copper quality. So we go right through to metal on site. So we're mining ore, putting it onto a leach pad. We're running a very dilute sulfuric acid through the heap, and then that extracts the copper out of the heap. We then take that solution and we put that through a solvent extraction and electrowinning process. So this is just for your listeners, about 30 to 35% of the world's copper is produced this way. So this is not any new technology. This is, standard run-of-the-mill technology, which produces about, as I said, 35% of the world's copper. The other 70%, is produced as a concentrate and a bulk concentrate sent away to smelters and refiners in Japan and China and various other places to take them through to copper metal. We're able to do that here because of the type of minerals, the copper minerals that we have in the ore. These are leachable copper minerals and extractable by the processes that I just broadly outlined. So we're looking at production here of 20 to 25,000 tonnes per annum of copper, and that currently is over a 9-year life. As I said, we're looking to extend that life beyond 9 years with further exploration. We're very confident that we'll be able to do that. The capital is about 220 million estimated in terms of what we've currently got in the feasibility, and that includes about $35 million of contingency. So, we're somewhere around the $180 to $190 million mark before contingency. The the capital intensity is pretty low. It's about $7,500 per tonne of annual. I mean, if you look around the globe, copper transactions and new project builds, they're typically more in the range of $15,000 to $25,000 per tonne of annual capacity. So at $7,500 per tonne, it's actually pretty low capital project for the scale of production that we're looking at. It produces revenue of about 1.3 billion over the current 9-year life, EBITDA of about 570 million, which flows through into an NPV of 125 million, and that's at an 8% discount rate, and an IRR of about 19%. So, it's good, strong fundamentals for a project, for a copper project of this size and scale. So one of the other key metrics is the cost structure. So we've got a C1 cost of $1.65 a pound and an all-in sustaining cost of $1.78 a pound. So, fundamentally an economically robust project, even at the current, prices, which are down quite a bit at around the sort of 230 to 240 mark. The project still carries, a strong operating margin. So fundamentally very sound. I think one of the other things that I'd just like to raise in terms of the financials is the opportunity to significantly sort of add value to the NPV. We've delivered the feasibility study, and it's a good quality piece of work done by, some extremely good consultants. But we've identified a number of opportunities to enhance, the economics of the project through some value engineering work. And some further exploration to drill up some of those additional resources that are very close to BKM. So, we can essentially, the opportunities we've identified, there's around $35 million in the value engineering piece, and by adding another 3 years of mine life through drilling up those additional resources, we can add somewhere in the order of $75 to $100 million of NPV. So, there's a lot of upside. It's really a snapshot in time. The feasibility is really, it is a snapshot in time. We've, taken it through to this point, and we're now in a position where we can undertake some of those value engineering pieces, and start additional drilling once the COVID lockdown eases up. And we believe that'll, add very significant value to, the BKM project. There's a lot of upside to come, as I've alluded to previously. So, good, strong underlying fundamentals with a lot of upside is probably the summary.
Okay, Tony, and looking at the project going out to the end of this year, earlier you talked about some key permits you're expecting to fall hopefully towards the back of the year. You've got various refinements and upsides. I assume you'll be releasing the results of some of those programs along similar timelines. And then once you've got a kind of refined project, are we looking at kind of early next year for a decision on pushing the button on what the project will actually look like, and then and getting some of the financing talks secured?
Yep. So yeah, pretty much you've hit the nail on the head there, Chris. So obviously we're with the COVID crisis and the lockdown at the moment, it's difficult to get on the ground to do additional work. We are doing a lot of work on the permitting, and the permitting is de-risking and the permitting is value adding. And I think that's something that's, often underestimated is, permits ultimately allow you to deliver the project, which is, the ultimate sort of value equation that you are looking to, deliver for shareholders. So, the permitting, all those permitting things will continue. The amendments to the EIA and getting all of those things in place. The value engineering piece, we are looking to get underway very shortly. We've identified a key individual to lead that. There's some important pieces of work to be done there in terms of looking at ways to, best optimise the project. And so that work will get underway fairly shortly, and I expect, we'll have a good flow of news, both from, the permitting side and also the value engineering pieces as we work through, the individual components of that additional study work. And then as soon as we can get back on the ground, we've got some drill rigs, in place, ready to go. We've got the people ready to mobilise. So, once we are able to get back on the ground, then, we'll have drill news flowing, which is very important, as I said, in terms of, building that mine life and, building the NPV and the overall equation for the project. So all of that, if you like, comes together over the course of the remainder of this year, which leads into, a packaged, ready to go, financeable project. And then, we'll start discussions. We've alluded to Aeturnum Energy, and the deal or potential deal with Aeturnum Energy is an important part of the overall, financing and development sort of strategy for the project. But there's also, a debt package which we need to be engaging with banks. There's potential off-takers, and in fact, I've had a number of off-takers sort of call me over the last couple of weeks, wondering, when we'll be ready to start discussions with them in terms of some offtake. So a whole sort of range of, I guess, technical things tied together with, regulatory things tied together, with progressing the financing. And that'll all come together, at the end of this year. And, then we can sort of get the full financing package locked down and then move ahead. I think, it's important for, investors to appreciate that, until you've got all the permitting things in place, until you've got all the various components sort of locked down and tied down, you need all those things to engage with the banks, and the banks then have their own diligence to undertake on the project, and we'll want to see certain things. Although having the experience of being through that process many times before, we should have or will have most of those bases covered by the time those discussions get underway in the next few months.
Okay, Tony, and I mentioned the potential deal at the top of the broadcast. You've alluded to it again then with Aeturnum Energy. Can you please just help investors understand what that deal is likely to look like, as much as you can, within the market regulations, and could it potentially accelerate some of the conversations that you're talking about?
Yeah, look, Chris, I think it's, for those that are new to the Asiamet story, just a little bit of background. So, we started out 5 years ago to build a copper platform with a view to, capturing, the upturn in the copper market when it comes. And, there's no doubt we've covered the copper market, and there's no doubt it's going to come, in the short to medium term. I think one of the things that we've been very clear on was that we were prepared to take the project through and wanted to take the project through to the completion of the feasibility study in our own right, 100% owned by Asiamet. At the point that we had the feasibility study complete, and then we were to move into the development path, it was always our intention, and I'm on the record of saying this numerous times, to bring in a strategic partner at the project level. That was always our preferred option. So we have, over the past essentially 12 months, been talking to a whole range of different parties in terms of a project level deal, or potentially a corporate project combination deal with Asiamet. So around, it's now 2 months ago, we engaged with Aeturnum Energy. Aeturnum is a Singapore-based commodities trading business. They are looking to build out their business into direct investments into both the energy and the metals sector, and to secure commodities that their trading business can push through onto their trading platform. So and they're sort of diversifying their business into those direct investment opportunities. So we've been working with them for a period of time. 2 months ago, they came in, took right when the market went into a severe sort of downturn. Unfortunately, we were caught with the timing on that. Aeturnum did a placement into the company, $3.2 million, and secured a 19.9% strategic interest in the Asiamet at the corporate level, and then entered a 60-day exclusivity period to undertake further diligence. They'd already undertaken, quite a bit of diligence, but to complete their diligence, a further 60 days of exclusivity. And then at the end of that period of time, they would put an offer to the company. So that 60 days has just been completed, and I'm happy to say that Aeturnum has, satisfied all its preconditions in terms of diligence. So, that's covered legal, it's covered, commercial in terms of all the licensing, all of that side of the business, as well as, the technical and financial aspects of the business. So they've satisfied all that, and now, are putting a proposal to us, which we anticipate to have, on our table in the next 24 hours or so. And that is a proposal to acquire whole or part of the KSK contract of work, with a view to working with Asiamet to continue to develop that project through to the financing and construction phase. Now, Aeturnum, we're not 100% sure as to what that term sheet is going to look like as yet. All we know is it involves an offer to acquire part or whole of the KSK contract of work. So we'll have to see how that looks. We have ourselves, as Asiamet, appointed Grant Samuel Corporate Advisory to assist us with both strategy and in the deal negotiation process with Aeturnum. Grant Samuel, have a very experienced mining advisory group based out of Australia, been involved in many mining and resource deals over a long period of time, and I think most importantly from our perspective, have been involved in the most recent cross-border transaction involving, an ASX listed company and investment into an ASX listed company by an Indonesian entity, for a major stake at the project level, and also a corporate level investment. So similar in many ways to, what's contemplated here. They have been, directly involved in the most recent deal that captures sort of, I guess, that spectrum of things. So look, it's very sort of important and critical time for the business. Aeturnum bring through their commodities trading business, a diverse relationship with Asian banking groups, and that will be obviously something that those strengths are important for us in terms of a strategic bringing that opportunity to the table in terms of their banking relationships on the debt side. And, the deal with Aeturnum, the intention has always been, as I said, introduce a strategic partner to cover a major component of the equity part of the project development. So that's all coming together. I can't say too much more than that right now. But it's all, as planned. They've done the diligence. We're through the diligence. It's all sort of coming together as proposed. Now, at the end of the day, we have to do what's in the best interests of all our stakeholders and our shareholders. So we'll be, assessing the offer from Aeturnum, with that as the key overlay, really, to accepting a deal or negotiating something different. But there's still some water to pass under the bridge over the next, couple of weeks at least, to see if we can reach agreement on a project level deal. So, exciting times, and we're looking forward to continuing to engage with Aeturnum to get a satisfactory conclusion in terms of value outcomes for all stakeholders and shareholders.
Tony, just conscious of your time, but before I let you go, I was hoping to get an understanding of what else is in the portfolio. You've talked about regional land packages, and we've concentrated entirely on the BKM project in particular and that contract of work. But you do have other assets in terms of upside beyond the current focus. What would investors be looking at if they were considering Asiamet at the moment?
Yeah, so I can break that, Chris, into two parts. So we've spent most of our time talking about the BKM project, and I've alluded to other sort of opportunities around BKM. We drilled last year for 3 months right next door to BKM, and we proved up about 1.5 million tonnes of high-grade polymetallic mineralisation. So zinc, lead, copper, silver, with some gold, at surface immediately adjacent to where we're proposing to build a mine. That was in 3 months. We believe that we've got multiple other targets to sort of test that look very, very much the same as the one that we've just drilled up in 3 months to JORC compliant resource. So, we would think that over time, we can grow that to, plus 5 million, potentially 10 million tonnes of high grade polymetallic, extremely, valuable grades. And there's been companies built on things that are less tonnes in grade than that as a standalone. So, very exciting opportunity there in terms of the polymetallics as well as the gold around BKM. And we have another large, project on the contract of work called Baroi, which is in a different forestry classification, and it's been difficult to permit over a number of years. But, high potential for another copper-rich polymetallic deposit elsewhere at Baroi on the contract of work. I think importantly, we have a second project in Sumatra called Butong. It's a large, very good grade porphyry copper. We're about a bit over 500 million tonnes at a grade of around 0.6% copper equivalent. It's got a high grade central core of in the order of 200 million tonnes, grading about 0.8%, and up to, better than 1% copper. So we've got very long intersections, 400-500 metre intersections of plus 1% copper, with, good gold, 0.2, 0.25 gold, down to sort of 500 metres. A very large system. It's had 33,000 metres of drilling. It has JORC compliant resources in the, in all categories. It's a very rare large copper project which has good nearby infrastructure, and it's just in very close proximity to the key, consumer markets in Asia. So it's 60 kilometres from the coast. It's next to a road. It has an airport within 50 kilometres. It has a port and 220 megawatts of new coal-fired power, 50 kilometres away from the project. So there isn't a large copper project that I know of globally that's so well located with respect to infrastructure. So, it's a very large growth opportunity for the company. We've been focusing our attention, as we've talked tonight, on the BKM project within the contract of work in Kalimantan. We've done, quite a bit of work to advance Butong through to, a conceptual level study. We've done initial metallurgical test work. We've done initial mine design, and we've done initial infrastructure layout and design. And all of that is sitting on what we call a IUP production. So, we've actually converted from an exploration license to a production license, as we alluded to earlier on, de-risking and value adding. It sits on a 20-year +10 production license, a very large copper gold inventory. Contains about 3 million tonnes of contained copper and about a bit over 2.4 million ounces of gold, plus 20 million ounces of silver. All from surface, all close to existing infrastructure, all near the key markets in Asia. So, it's a very important project in terms of a growth pipeline for Asiamet. And, we are looking to take that project forward through partnering with other groups. And we've had a lot of interest predominantly out of Asia, to partner on us with that project. Unfortunately, we were advancing well in getting something bedded down there when COVID hit. But, once the COVID crisis and the subsequent lockdown works its way through, we'll be re-engaging with those parties and looking to partner on that project to take that project through further development work, feasibility study, into production funded by a larger deep-pocketed partner. So, yeah, huge growth opportunity that sits behind, the current development feasibility level development project we have in Kalimantan. So, it's a very exciting portfolio. It's as you alluded to earlier on, I guess it's a company and project that has been a bit off the radar screen, but it's one of the very few, in fact, a rare portfolio of copper assets that are very well a long way down the track and ready to sort of take into development to meet this sort of predicted or upturn in the copper market when it comes.
Tony, thank you very much for joining us and for your time today, and we'll look forward to watching Asiamet progress BKM and the broader portfolio through to bigger and better things. Thanks again for your time.
Thanks, Chris. Enjoyed the opportunity, and thanks for taking the time to talk to me. Thank you.